with that, we want to make sure that everyone has enough opportunity if they have questions towards the end of the program. With that said, Jonathan and Philip, I think I made you guys co-hosts. You should be ready to go.
Yep, let me just share this PowerPoint.
Anything you need from me, just holler out.
Perfect. And let me just share the PowerPoint. Swap presenter. Make sure that is full screen for everyone here. Perfect. So first and foremost, good afternoon, and thank you again, Louis. My name is Jonathan Parento. I am the internal wholesaler working here in the Southeast Territory to accommodate the best agency. Phil Feeblecorn is the regional vice president of the Southeast Territory, who will also be on this webinar in a couple of more slides. But first and foremost, thank you again, Louis and the best agency, for allowing us to speak here today regarding our foreign national program and our top tier accumulation IUL product and SwiftTerm products. For some of you who may not be familiar with Symetra or have yet to place business with Symetra, just to kind of give you some background around Symetra, we've been around for about 65 years, as we started off as a subsidiary of Safeco, in which in 2004, the life insurance business was sold to an investor group led by White Mountains Group and Berkshire Hathaway. By then, in 2016, it was then acquired by Sumitomo Life, which is a large Japanese insurer based, for $3.8 billion, as that Japanese-based company was looking to expand outside that Japanese market. Which brings us to today, where here at Symetra, we're among the top 3 largest publicly traded life insurance companies, and as we continue to grow in all spaces, including the foreign national space. So with that, we want to continue into the program details. So who technically qualifies to be an insured of the foreign national program? So there are 4 requirements in order to be eligible client for this program. 1, they must have a temporary U.S. visa. 1, a valid U.S. passport. 3, a global net worth of at least $1 million or equivalent to. Now, this was just recently changed from 2 million now to 1 million in the last couple of months. So another adjustment that we've made here. And then 4, a U.S. connection, which we only require 1 U.S. Nexus connection, which we'll go over in next couple slides. One other thing to mention is the solicitation requirements. So all solicitation must take place here in the U.S. while the insured or policy owner, if different, are legally and physically present in the U.S. Now, again, this includes all type of marketing, illustration, applications, medical examinations, and tests. As the application, any additional forms must require wet signatures, as we don't allow for electronic signatures to be taken. Now, some program highlights regarding the U.S. Nexus. As I mentioned in the previous slide, for an eligible client, they must only satisfy one of the following U.S. Nexus connections, which could be of the following. 1, own real estate in the U.S., own a business in the U.S., be an employee of a U.S. domiciled company, have a primary employment in the U.S., have a U.S. tax liability, have immediate family residing in the U.S., travel to the U.S. for business and or pleasure, or have a U.S. bank account or brokerage account. Now, one thing to note in regards to the U.S. bank account or brokerage account, we only require a minimum of $25,000 of a balance that it needs to be open for at least 1 month. So among the industry, that's one of the lowest requirements of 25,000 minimum balance. So this is a huge success for our Nexus for eligible clients. Now, which products are available for the foreign national program? That would include both our permanent and term life insurance products, except for the SwiftTerm product, which we'll go into later, that it's only for domestic clients. But for our permanent products, this would include our protection IUL, our accumulation IUL Ascent product that we'll go over in a little bit, our VUL product, our current assumption UL, and then our core term. Now, the minimum face amount for any of these policies is 1 million. That's including term. The global minimum net worth, as we mentioned, has to be at least 1 million in US dollars. It can be direct ownership or US ownership options. Again, based on the countries list, A or B, or even C, for ages, issue ages are from 18 to 75 for A and B countries, and 18 to 70 for C countries, which would lead to facultative only. Now, the medical risks, it goes from super preferred all the way up to table D. We do offer a limited power of attorney available to deliver the policy. Now, one thing to mention in regards to limited power of attorney, it must be an individual who's at least 18 years of age and is a professional or a family member. And one thing we'll also send out, so you have the referred A and B countries and C facultative only countries. We'll get this out to Lewis and the best agency so that you could see whether or not your client fits in those countries. In regards to our term product, the duration periods we have are 10, 15, 20, and 30-year term durations. Again, very competitively priced. We have additional riders that can be added. And the great thing about this product, it has great convertibility options, as it's the earlier of 10 years or age 70, whichever comes first, and it's available to any permanent products offered at that time. So again, that would include our accumulation IUL Ascent, protection IUL, VUL, and current assumption product. Now, we do offer coverage on juveniles. However, there is a list of requirements in order to have the juvenile accepted. There are only two products that would allow for juveniles: the current assumption UL product, and then our Symetra accumulator VUL. Those vary from 15 days to age 15. On the VUL, it's standard only. On the current assumption, the risk class is only juvenile. Again, the minimum face amount for those products are $100,000, but we need to have at least one parent with 1 million of life insurance coverage with Symetra before we could allow for a juvenile. So there needs to be at least one parent with the 1 million of life insurance here at Symetra. Again, in order to be considered for this, the juvenile must be a U.S. citizen and have a valid U.S. passport or U.S. birth certificate, and then also any APS statements that would be required on all cases. We do also allow for premium financing. So if you have any cases that would fit this for your foreign national client, we do allow for premium financing on foreign nationals. The eligible client must have a net worth of at least 5 million in US and an annual income of 200,000. Now, we could go into a lot more detail in regards to our foreign national premium financing, where we would be more than happy to get someone from our advanced markets. But for today, what we're going to do is we're just going to highlight the program, and then if for any additional information, I would say reach out to Lewis and the best agency, and we can all get on one call and dive a little deeper in regards to the product. Again, the maximum issue age for the premium finance program on a foreign national is age 70. Now, anything that usually is 65 and up tends to be a little bit more difficult from an illustrative perspective on premium financing. But even at that age, we'd be more than willing to take a look at it and see what we could do. So for any additional information on that, I would suggest reaching out to Lewis and his team, and they would be more than happy to walk you through the program. Now, in regards to foreign nationals residing in the U.S. under specific visas or waiting approval of a green card, whether they have a E1, E2, H1B, H4, K1, K3, L1, L2, TN, V1, or V2 visa, or temporary green card, and they're waiting for approval of a permanent green card, they must be here residing in the U.S. for at least 5 years consecutively, and again, the policies can be delivered with a limited power of attorney. And we have a whole war chest of different marketing pieces in regards to our foreign national. So if you have any additional questions regarding the actual program, that'll include the highlights, the overview, underwriting requirements, and preferred risk classes. We have those available right on our website, which we'd be more than able to get that to Lewis and his team so that he could direct you guys there. It will also highlight some of our product materials, and then also how to write a sufficient cover letter when submitting the application on the foreign nationals. Now, to get into more of a product discussion, we just recently made a few updates to our accumulation IUL, one also changing its name to the Accumulator Ascent product, but also adjustments to the product itself. Keeping our core values that we have here at Symetra, our VTS, value, transparency, and sustainability, VTS. You'll notice throughout all of our product lines, that consistent message is being told through all of our products. Now, the one being how we're one of the industry leading low cost and charge products in the industry. And ultimately that derives into our competitive cash value and distributions in later years. And then also our several focus index allocation options that we offer, from our new Putnam dynamic low volatility strategy that we just launched to our Symetra allocation index strategy that we launched at the end of last year, utilizing the VIX on the Chicago Board of Exchange. One key feature as well on the accumulation IUL product is the strong embedded guarantees that even for an accumulation product, it's typically around 15 to 20 years on our accumulation product, depending on how funding is. Again, for an illustration, feel free to reach out to Lewis and his team or myself directly. I'd be more than happy to help you with a illustration request. So some key riders and features regarding our accumulation IUL product is going to be our embedded chronic illness rider, which as long as the client is at least standard or better, it is automatically included in the policy, in which the client can receive a lump sum accelerated death benefit of 50% or up to the 500,000 limitation, as long as 2 out of 6 ADLs or cognitive impairment are met by a physician within the last 12 months. And again, for any additional information, we have some great marketing pieces that can walk you down the chronic illness rider. We also have a terminal illness rider as well that's embedded, as long as they're standard or better. There's an overloan protection rider as long as the GPT test is added. It's automatically included. Charitable giving rider, which will allow for 1% of the initial death benefit up to 100,000 to be to a charitable organization. Then we have our chronic illness plus rider, which similar to the chronic illness embedded rider. However, the chronic illness plus rider is available to any individual who adds it on. There is a supplemental application that has to be approved by an underwriting team. However, the benefits of it is up to 100% of the death benefit can be accelerated in a 2% or up to an IRS per diem, as long as 2 out of 6 ADLs or cognitive impairment, by a licensed practitioner. And then we do offer a supplemental protection rider, which would allow for a blended policy, adding in some supplemental term rider. And then we do have a surrender value enhancement rider for those, not just only for premium financing or business owned cases, but also individual owned cases as well, where what would happen over a 5-year period, surrender charges are decreased with this rider. It's a one-time $500 charge, and then on the policy, and you will see it lower the surrender charges in the initial 5 years. Comp is spread over 4 years with this rider. Some of the key features that we have on this product is our premium deposit account, which there are a few states in which it has not been approved. One of them being Connecticut and California, but other than that, it is available in most states. We do have a return of premium death benefit option C, and then we are able to dollar cost average. So within this product, we have 3 different strategies that we're able to allocate to. The first one being the newest, our Putnam Dynamic Low Volatility Excess Return Index. mouthful there, but it's one of our strongest index allocation options. It offers two one-year point-to-point strategies that are uncapped, have high participation rates, and one has a bonus and one doesn't. So the first one being the Putnam with a bonus. Again, it is an uncapped option. It has a high par rate of 140% with a current bonus of 75 basis points, whereas the Putnam Dynamic Low Volatility with a high participation rate is again a one-year point-to-point strategy that's uncapped, has a high participation rate of 180%, but there's no bonus added. So just to kind of give you an idea of what this looks like in a hypothetical scenario, if we took the 10-year annualized performance since June 30th of 2022, it was 4.52%. So then we would take that 4.52% and multiply it by 140% on the bonus allocation, and then add 75 basis points. It would then be equivalent to around 7.08% return over that on that 10-year period. Now, in regards to the high par rate of 180% with the no bonus, on this hypothetical scenario, we have that same 4.52% multiplied by that high par rate of 180%, and it's roughly around 8.14% is how that would be calculated. We call it our Putnam combination strategy, and as you can tell, those returns based off of that hypothetical performance is extremely strong. The next strategy is our Symetra allocation index, which is a mixture of the S&P 500 and JP Morgan Efficiente 5. So similar to the Putnam strategy, which is a volatility controlled index option, it offers the JP Morgan, which again is a volatility controlled index. But the way it's utilized is using the VIX, which is based off of the Chicago Board of Exchange. And 2 days prior before our sweep is either allocated to an uncapped S&P 500 with a current spread of either 5% or 3%, depending on the index segment term, either a 1 year or 2 year segment. And we'll go over that in the next slide. But again, it is uncapped. And then the second option, if it is under 16% on the VIX, it's going to be allocated to that S&P 500 with the spread. And if it's above or on 16, it's going to be allocated to an uncapped JP Morgan Efficiente option, which does not have the spread. It just has the high participation rate. And then lastly is our core strategy, which has been on this product since inception, which has your 1 year point-to-point S&P 500 with a current cap of 10%, and then a 1 year point-to-point JP Morgan Efficiente index with no cap and a high par rate of 140%. And then our 2 year blended strategy, which is a 50% allocated to the S&P 500 index and 50% allocated to the JP Morgan Efficiente. Again, that's a 2 year point-to-point strategy that is uncapped as well. There's a higher participation rate on the JP Morgan on the 2 year blended as well. Any questions so far in the chat in regards to either the foreign national program and or so far the strategies on our accumulation index?
Yeah, hi, this is Rhiannon. You had referred to reaching out to Luis for some illustrations. I was just wondering where I could get his email address.
Yes.
Absolutely. I will definitely email out to you, but it's Luis, L-U-I-S as in Sam, Luis at bestagency.com. But I will follow up with a quick email after, probably tomorrow because of the hurricane, and make sure that you have my contact information. But thank you for asking.
Cool. Thanks, guys. Thank you for your time. Enjoying the, just enjoying learning. Thanks.
Thank you.
You're welcome. Perfect. And as I mentioned before, the Putnam Dynamic Low Volatility Excess Return is a great option that we just launched early March. And our partnership with Putnam, goes beyond just putting it on our accumulation and soon to be our protection IUL. But they're a great partner in the sense if we want or to use them on a call to help educate further in regards to their product, they're more than happy to jump on a call with us. But the way the actual allocation index is set up with them is, I think, very easy, and a lot of people understand it. It's based on 3 different asset class options: 1, U.S. stocks; 2, U.S. bonds; and 3, cash. And between those 3, they're able to diversify between the 3, and they have the ability to reallocate within the index on a daily basis. Whereas a lot of other volatility controlled indices, what they're doing is, they look back over a time frame, either 6 months, 3 months, to determine the next month's allocation, reallocation. With this, they're able to dynamically rebalance and able to flex this rebalance based and to keep a consistent 5% volatility. So a very unique structure, and it's something that's extremely simple for a lot of individuals to understand. Most people see S&P 500, low volatility index stocks. That's very easy for a lot of people to understand. They see it and hear it a lot more. 2, U.S. bonds, using the S&P 10-year U.S. Treasury note. And then lastly, cash. Typically they would use the U.S. 13-week bill high discount rate for that cash position. And then, as we mentioned, for Symetra AI strategy, it utilizes the VIX, which is the Volatility Control Index on the Chicago Board of Exchange. So what you would notice is you can Google VIX, and it'll show you what the VIX is currently today. So using that number, 2 days prior before the sweep, if it's again below 16, it gets allocated to an uncapped S&P 500 with a spread of either 3% if it's in the 1 year, or 5% if it's in the 2 year, which is going back to the strategy of our low cost and charges built within our product. Those spreads are among the industry low. And then if the VIX is above 16, it's allocated to the JP Morgan Efficiente 5, which is again uncapped with no spread. So the spread is only when allocated to the S&P 500. With the JP Morgan, it's just an uncapped with a higher participation rate. Any additional questions in regards to that? Typically, we see that most people, when they allocate to this type of option, they're usually in a DCA or dollar cost average approach, as it's able to diversify between these 2 allocation options depending on how high volatility is in the market. Great. And now to go to some competitive analysis on some standard loans on our accumulation IUL Ascent. As you can see, maximum distribution amounts are perfect, are great. However, what we want to really focus and hone in on is the 20-year cumulative charges. Going back to our story that's stayed true since the inception of our IUL product is our low cost and charges. If we notice, our 20-year cumulative charges are 158,000, almost 159,000, which is among the top IUL carriers. We're among the lowest. We are the lowest. And then a strong target around 40,000. Cash value, which is derived from those low costs, more money being put to work. Strong cash value of 915,000. Initial death benefit of 1.1, and great distributions for 20 years of 75,000. So you have a strong max distribution based on this hypothetical scenario of a male 55, putting in 100,000 for 5 years, increasing, then switching to levels, and then taking withdrawals, and then switching to loans. Now, same scenario here on female. Again, this is only using standard loans. If we were to use participating, it would only be a little bit more because you're showing a little bit more arbitrage. Currently, our maximum illustrated rate based on the 10% cap is 6.24% with a current par rate of 5%. So even with AG 49A, the maximum illustrated positive arbitrage that you're able to show on illustrations is 50 basis points. So you would see that consistent 50 basis point positive arbitrage between our illustrated rate and what our participating loan rate is. One other thing that really sets us apart from the rest of the industry, there are only 2 carriers in which have this timing of index credits. So our approach is the beginning of segment value. Therefore, we're crediting based on the beginning segment value at the time of crediting, whereas other carriers' approach is based on the end of segment value. So they're deducting charges, and then based off of that number is what it's credited on. For example, we have here the beginning of the segment, 100,000 is going in. It received a 5% return at the end of the year, or when the segment is fully matured. Based on that amount, the credit amount is 5,000. 100,000 times 5%, 5,000. So they received an equivalent rate of 5% return. Whereas other carriers, the way they charge is they deduct those charges and they get an end of segment value of 90,000 multiplied by that 5%. Their actually credited amount is only around 4,500. So this is just another way that we go back to our core values of value, transparency, and sustainability. This goes to the transparency of the product. What's being shown is, and what's being illustrated is what we can go behind the scenes and see how the numbers are being actually illustrated. So great way of how we credit based on this beginning of segment value. One other program that we just recently enhanced over the last 2 weeks, if you haven't received the marketing email, let us know. We'd love to put you on the email so that you're up to date with all the Symetra highlights and news feeds that are done on I would say almost every month, something great comes out here. And with this, from ages 18 to 50, they can receive up to $3 million in coverage without doing a medical. So what they would do is they would go ahead, submit the application, the part 1 and part 2, and then our underwriting team will do the rest. They're going to run an MIB, MVR, script check, and based on that scoring, as long as they fit that scoring where they can receive at least a standard or better, they won't need to go out and have a medical done by an examiner. And then from ages 51 to 60, they can receive up to $2 million in coverage as long as they're in a standard or better risk class. Again, only submitting the part 1 and part 2, and we go ahead and do the rest: MIB, script check, MVR. Now, again, I know that Best Agency has a lot of great marketing material in addition to what we have. So just to give it a little additional complementary pieces we have on our website. We have marketing brochures, how the timing of index credits work, the flyer, current caps and par rates, any additional information regarding the index allocation options, our premium financing, and then also advanced markets tools. We have a whole site in which you and Lewis and his team are able to go on and show you any programs that we have available from our multi-life, high net worth foreign national, external term conversion options, and then our IUL extra coverage program. Phil, anything you wanted to add in?
Yeah, that would be great. Can you hear me okay?
We got you.
A couple things as a group to keep in mind on let's go back to the high net worth foreign national program. We don't have to go to the actual slide, but as a discussion on that, if you noticed, we said $1 million net worth of assets worldwide. That's important to keep in mind because when you start looking at that, many of the other carriers that are in this market, they want that to be domestic or US assets. So we do look at it globally. So, usually your people are going to be worth more than that anyway. But if you did have somebody that, the the dollar amount wasn't all here, that could be a problem elsewhere. So I would say, number one, just keep in mind, we're counting 1 million of worldwide assets, not just US domestic assets. The second thing I would really stress is on the surrender value enhancement rider. I know we all love to get paid up front. And a lot of times, there's something where you don't, we always do what's in the best interest of the client, but a lot of these riders out there aren't necessarily in the best interest of the client. I believe we've got something where it's good for you and good for the client because of the low cost with that rider. It's a way to annuitize your business. If you're getting paid over a 4-year period and you actually make more over that 4-year period. So if you were making $1,000, you'd make more like $1,100 over that 4-year period, spread out because of that rider. And there's no drag on or minimal drag on the contract because of that one-time $500 fee. The reason I bring that up is that's a powerful rider to keep in mind, especially if you're doing 1035 exchanges. As we all know, nobody likes to look at the new illustration that they had $1 million in cash value, and now they look at their illustration and they've got minimal or no cash value in the new product. So I would definitely, run your illustrations with and without the rider. I think you'll be pleasantly surprised. And being a 4-year payout, most of us on here, have that time frame, so we're going to be around during that period. But if you compare that to other carriers' riders, you're going to see a big difference on the values later down the road because of the expense of that rider. Last but not least, and John touched on it very well, the power and the importance, and I know you probably hear this from a lot of carriers, but the low cost structure inside of our products. You really need to keep that in mind because, again, if you're running stuff at 6% or 6.25% or whatever number, I think we all know how that averaging works. Mm-hmm. And we all know and have experienced, especially right now, that there are going to be years that you don't make that 6%. So the problem being is, when you have a zero, if you're in a contract that's got 6 to 10 to 12% charges inside of it, that zero takes a big hit in that cash value. So it's important to make sure that you're dealing with, that type of product with that low cost structure so that it doesn't become a problem in the years that we do experience, no return or low return. But those are the 3 areas that I would make sure if you take anything from this, those are some areas that I would definitely have written down.
No, that's perfect, and I think you hit it perfectly. We tend to think zero is the hero on an IUL product. However, it's still an insurance product where charges are still coming out. So even in those 0 years, those charges are still coming out and affecting the cash value in the policy. So always remember stress test the product, see how it actually runs when it's not always sunshines and rainbows, but when we do get some rainy days like we have today, and see how the policy actually holds up with some stress tested scenarios. But with that, it brings us to our, award-winning. I can say that as we, in 2021, we received an award for the Gartner Eye of Innovation for our financial services in America's region for how innovative our SwiftTerm product or platform, anyway, has really come along. So, we've spent, a good 14 to 16 months really working at this automated term life insurance coverage where you can receive a policy in as little as 18 minutes. Now, this product has been a huge success here in regards statistically, but how people actually receive it, and they've from what we've heard, agents love it. Our BGA partners love it. So how it actually works is it's automated from start to finish. So If you've ever done a drop ticket before, you would go in iPipeline, complete a digital drop ticket, which takes anywhere from 4 to 5 minutes. From there, an application is automatically emailed over to the client based on their phone and also the.
You know, never say your thing finish already.
Oh, I'm sorry.
Sorry about that.
No worries. And then, as I was saying, based on their telephone number and social, it will automatically email that where the client can put that in order to access it. Once the client completes the application at their own leisure, and it's only the part 1 and part 2, asking yes or no questions, and then what's your annual income? Have you, what type of job you have? Based off of that information, a decision is made right then and delivered to the client. So there's 3 paths in which they can receive a underwriting offer. The first one is that instant coverage in as little as 18 minutes by that's including the drop ticket portion, which takes 4 or 5 minutes. The actual application part 1 and part 2 take 12 minutes max, as long as they have, especially if they have the information in front of them, it's easily less than that. But we found an average of around 18 minutes to receive an instant coverage offer, which involves no human touch, and for those qualified applicants. Secondly, if for some reason they don't fit that instant approval offer, what happens is they don't get kicked out of the program altogether. It's not one of those yes or no type programs that you see on the television. This is if they don't receive the first instant coverage option, it moves to the next step, which is our accelerated underwriting, where there's a light touch by a real underwriter looking at the case, where they may have a couple questions that may have been flagged on the instant approval option, and then based off of that, the underwriter is either going to approve it right away, or they may ask the client a couple additional questions just to clarify, which isn't one of those prolonged 45 to an hour minute phone call. This is something that's a quick message, either by email or directly to the agent. Then other than that, no additional questions from the underwriter. Again, that takes anywhere from 24 to 48 hours, sometimes even sooner than the 24 hours if it's something pretty simple that the algorithm for the automated process didn't pick up. And then after that, for some reason, if they didn't make it through the automated or accelerated type underwriting, it'll move to a fully underwritten option, which takes anywhere from 10 days all the way to 30, as it's pending a full medical evaluation. Now, we've had a case when SwiftTerm first officially launched where the client had their medical done by Friday. They went ahead and sent in the labs were automatically sent to us. Once the labs were submitted, he actually received an offer by Wednesday for the full underwriting approach. So there are cases in which it could go even faster than those 10 to 30 days, depending on when the medical exam was done and the full extent of the medical evaluation that needs to be done by our underwriting team. So just to kind of give you an idea of who this is really marketed towards, a younger demographic, it does cover ages 20 through 60. However, our targeted ages that we're really seeing a lot of really good success is the ages 25 through 50. Again, but it does cover from 20 to 60 from an from a product perspective. The lower face amounts, it's from 100,000 all the way to 3 million. And all available risk classes are available. So from super preferred all the way to standard. And if it does move to the fully underwritten, we are able to give substandard risks on this as well. And then from term duration, we have 10, 15, 20, and 30-year term durations. We do have included riders such as our accelerated death benefit for terminal illness, and then additional riders such as accidental death benefit, children's term insurance rider, waiver of premium, and then we do have convertibility and renewability with this SwiftTerm option. Now, our convertibility currently is a little different from our core option, which, as I mentioned before, was the earlier of 10 years or age 70, whichever comes first, to any permanent product offered at that time. Now, with SwiftTerm, it's the same 10 years or H70, whatever comes first. However, it's only currently convertible to our current assumption UL product. So even though it doesn't have the full product portfolio available, it does have convertibility to a product, and then it also has renewability as well. Now, from a competitive heat chart, we just actually did a little bit of repricing last month. So we rank among the top when it comes to, $1 million death benefit, 2 million, and 3 million. I felt that 1 million may have been safe just to show one heat chart. But as you can see from our targeted ages, 25 to 50, we really stand out as the top competitively priced. Now, term insurance over the last couple of years, the pricing has continuously decreased, for all insurance carriers. Even with SwiftTerm, we try and remain, top of the line with our competitiveness. One thing to keep in mind, we may not be one in all scenarios, but we may be 5 cents, 2 cents, 3 cents difference in pricing. But the ability to receive an automated offer or an offer in general, and in anywhere from 18 minutes to 78 hours is pretty significant, especially if you're working with, type of individuals who need an SBA loan or a loan in a specific amount of time. And, Phil has a couple experiences that he's personally had with some cases prior to coming here at Symetra. And, he knows, it's worked out great for him. And we've seen other agents with our BGA partners who have really great success with the SwiftTerm process.
Yeah, if you just want me to touch on one of them as an example, I got a call from a producer that had a client that needed a $2 million SBA loan backed with a policy, a 10-year term policy, and the bank was requiring that the policy be enforced in 6 days. So usually the response to, hey, I need $2 million and I need it enforced in 6 days, the answer is, yeah, that's not going to happen. I went ahead and went down the path of this one, hoping, the ones I had used in the past at AXA and Pac Life and Lincoln, I wasn't really having that greatest success, and I was keeping my fingers crossed a couple of years ago or a year and a half ago with this one. The process was amazing. The response was amazing. The turnaround time was great. Literally from start to finish, it was 42 minutes to get enforced. And there was no better feel than to call the bank up and say, we got the policy in force. And that was the same day that we started the process. So, we have experiences and we get feedback like that every day from folks. I'm not going to say, as John said, there's always sunshine and always rain, but 72, 73% of the time, this process does exactly what we need it to do, and you end up with the policy within 24 hours. So this is something. The other reason we bring it up is you want to get yourself comfortable with this process, because there's a good chance, if you hear it from us first, that starting next year, we're probably going to have this process tied to our permanent products. So potentially we could be in a situation where instead of it just being SwiftTerm, it could also be SwiftTerm. So just keep that on the down low at this point, but get comfortable with it, because again, this is where it's going.
Yeah, one thing to also mention, prior to your first case, you need to be pre-appointed before that first case. Now, we do have a dedicated SwiftTerm back office team who has been great, where we've had appointments done in as little as half of a day. We know that the urgency to get these cases placed in a timely manner, that's why you want to have it done, that 18 minutes or less. We have that dedicated team there in order to get that done in a timely manner. So again, it does need to be, you need to have appointments done prior to your first SwiftTerm case. And as Phil mentioned, the success rate that we've had with this, going from automated and accelerated type process, getting the policy in 48 hours, has been about a 72 to 74% success rate. making up a good portion of the 2 out of the 3 ways to receive the medical offer. Any additional questions in regards to, our accumulation IUL product, our SwiftTerm product, or the foreign national program? Again, myself and Phil and Lewis, we're more than happy to hop on a call individually with you and go over any specifics that you may have. Perfect. And just like our other microsites that we have for our foreign national program and also our accumulation, we do have a dedicated SwiftTerm microsite where you can have a quick SwiftTerm process video, how it actually works, how it breaks down, what the client sees, what's actually going to be needed for the drop ticket, and also the questions that are going to be asked to the client. Those are all on the microsite. We actually even have a very I would say a good medical understanding of that would help you vet a case, whether or not it's going to, or set expectations for the client, whether they'd receive an automated, accelerated, or full underwritten based on some medical questions. So we do have that available on the microsite as well. And I think it's very helpful to vet the process before submitting as well. With that, if there's any additional questions, Lewis, anything in the chat or?
Chat looks good. Nothing in the chat. Any questions out there before we wrap up? Wanted to say thank you very much to you, Jonathan, and to you, Philip, for stopping by today and taking some time to spend with us and our advisors out here. We want to thank our advisors for joining us today and taking the time. And today's been a crazy day for, I'm sure, everyone out there. A couple of things that I just want to really wrap up really quickly. The high net worth, again, as Philip mentioned and Jonathan, 1 million net worth globally. I think that's very important. They have some extremely competitive products, especially if you're looking to accumulate cash, and with distributions later on. And then again, want to reiterate, because I want to make sure we don't have any problems. If you're doing SwiftTerm, make sure you're contracted. Call my office. We'll get you with the contracting team, get you contracted. That's done really, really quickly. As Jonathan mentioned, we've had agents get ready to be done in less than 24 hours. Everyone here will be assigned a personal internal wholesaler or strategic business consultant here at Best Agency. But I also want to let everyone know I'm available. I own the place. If there's anything I can do for you, let me know. Yeah, most places you don't get to talk to Bill Gates if you have a Microsoft problem. Over here you do. So if any questions, Rihanna, if you have any questions? Yep, you're good. Philip, any last words?
Thank you for your support. Thank you for your partnership.
Yeah, thank you, Lewis. Phil and I, we value our partnership with you, and for those in the Florida area, we hope you guys stay safe, and we look forward to a strong fourth quarter with you guys. So if anything we can do, let us know.
Thank you very much. Thank you for everyone for attending. Thank you again. Have a safe rest of the week.
Lewis, quick question.
Yes, ma'am. Yes, ma'am.
Probably not that relevant to anybody else if everybody else wanted to leave. Once appointed, is there or I'm sure there is one, but like the time limit, like you must write a policy within 6 months to keep your appointment, or within 1 year, or I'm new at
No,
this.
that's okay. No
so
worries.
I don't get
Good
appointed
question.
with 100 companies and not anyway, but the products sound great. So
Great question. The way we do it here, Rihanna, is we don't contract you unless you're ready to write or have a piece of business in line. Reason being is we do pick up the cost for contracting for our agents. And like you, we don't want to get you contracted with 30 different companies. And you probably won't do business with 20 of them. So if you think you're going to write a case, we will get contracting over to you. We'll pay for it. We'll get it done. We'll get you going. If that case falls through and it doesn't work out, that's fine. You'll still be contracted. Typically, carriers keep it going for about a year or two. If you don't write business, then they will cancel out the contract for no business. But that's no big deal.
Okay, and that would be just like getting appointed with Symetra, right?
Right, correct.
Okay.
All right.
Thank you.
You're welcome. You're welcome. Thanks, everyone. Appreciate it. And we look forward to the next section. Thank you.